Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, October 3rd, 2025. It's 1:06 p.m. Eastern Time, so it's a midday update. Markets are flattish. We've got the S&P slightly positive, the Nasdaq slightly negative, so it's a go nowhere day. So I'm just going to kind of talk on a few of the charts and the things I'm watching today. As most of you are aware, the government is in shutdown mode, and that's going to continue at minimum until next week. Or yeah, I forget when they meet. I don't think they meet again until Monday, so I believe next week. And again, this one I think a lot can agree has the potential to go on for quite some time based on how far apart on the issues both parties are. So we'll see where we go. So therefore, a lot of the reports from the government are delayed, and we do have a couple coming out recently. As you know, I highlighted we had the ADP report, because that's private sector right there. ADP is a private publicly traded company, and that just missed by a mile. It just confirms, what I and the media is starting to recognize. Rates are going down, but we're in that. I'm not going to call it bizarro world, but that's what the market does. It wants the juice. It's like a heroin addict getting that shot of heroin they want so bad, the rate cuts. And again, there are a lot of different economic reports and things, or a benign inflation report that can come out that can tilt the odds of the Fed in the direction of another Fed cut. But like I said, be careful what you wish for. It's like wishing for cancer to get out of, get a sick pass to get out of class or something. You might want to get sick to miss, get a little pass, get a day off work or whatever. But again, be careful what you wish for. In this case, employment is everything to the stock market. Again, with the consumer accounting for 70% of GDP, consumer spending. So the job market's clearly turned. I've highlighted that many times. And if it proves to be an anomaly and we go back down, then it will be the first time that I could, as I've showed you over half a century or more, where you've had falling unemployment down to record lows, followed by a trough and a clear, again, trend reversal, not one of the little blips on the way down. So now the thing is, this is what the market does each and every time. It takes a while. That bottoms first, then comes the recession. But let's talk about real quick the reason I'm doing that. I know I've been harping on the job market. A lot of, again, the government numbers are not, they've been delayed due to the shutdown, but we did get ISM today, and that's interesting to note. Consensus was for 51.6, and the actual was 50. So we're going to talk on this one real quick, since there's not a lot of economic reports. The way that works is pretty much anything above 50 is an expansion, indicates that the services, which is the biggest part, one of the biggest parts of the economy, is expanding, and below 50 indicates it's declining. So let's take a look at that chart here. I've got it right here. Zoom in for you. And so what I'm going to do is hand draw in. This is just one of many charts. This one happens to be from investing.com. Let me pick a color that will stand out. This one should do the trick. So here's that magic 50 level right there. I'm going to go back, and I did max here. We're going back as far as we can, as far as we really need to. This goes back into the late 90s, this chart we're looking at here. So as you can see, and as you may know, if you're not aware, we've had really three real bear markets in the last several decades. We had, of course, the dot-com bubble that burst in March of 2000, largely due to the dot-com bubble, similar to the AI bubble now. Of course, now you've got every Tom, Dick, and Harry telling you why it's different, that they weren't earning money and they didn't have business models, and AI does. So whatever. Again, no two bubbles are going to look alike, and you can have your own opinion on whether AI is in a bubble. To me, it's a vicious cycle, kind of a circle jerk with spending and the hype in AI. And once the big tech companies, Microsoft, Alphabet, realize they're throwing more money at this than they're actually making or going to possibly make in the coming future, they'll pare back their capex spending, which then creates a vicious cycle that runs the other way. NVIDIA will go down. NVIDIA then will give less money to ChatGPT or OpenAI and other companies that they've been seeding to buy their chips, and the whole thing will reverse at some point. That's my belief. But either way, we're going to watch the technicals. I love talking about fundamentals. I love talking about where I think XYZ or this certain commodity or the stock market may be 2, 3, 5 years from now, but that's not how I'm going to position. I'm going to position based on the charts, on the daily, the weekly, especially on swing trading 60-minute charts. But these are, and I don't have the S&P overlaid, but you can do that yourself. There's the dot-com bubble burst in 2000. The bear market ended in, I think it was 02 or 03 right there. And you can, of course, see ISM went below that 50 level. There was a Great Recession. It certainly dropped there. And then there's COVID, when the world shut down, literally shut down for the first time in history. And so what I'm showing you is a very clean, simple chart with zero exceptions. That's the only time you get ISM drop to 50. Now you can see what it's been doing. It's been hitting that level, almost as if it's being held up by an artificial hand. Either way, we're not below it, but we're certainly not above it, and this is almost unprecedented. Again, a lot of things got wonky with all the stimulus, money printing, fiscal and monetary stimulus kind of sent things way up and way down. Either way, guys, this is just another indicator that kind of shows the overall health of the economy, and so I'll let you figure out, what that means. All I can tell you is that, again, we missed. And so the reports that we're getting now haven't been so hot. It kind of shows that trend. And remember, think of the economy like a super tanker in the sea. You got your little speedboat, your cigarette racing boat, whatever it is. That thing can turn on a dime, right? Can turn pretty quick. You have a super tanker, and it's a slow turn. That's typically how the economy is, unless they shut it down like COVID. That was a unique situation. But normally you see the clear turn before you invert there, and that's what seems to be happening here. And so all the rate cuts in the world aren't going to, ultimately stave off a recession. Enough monetary stimulus and injections could, like it did in COVID. However, I'm not the only one that argues the Fed doesn't have as many arrows in their quiver this time around with inflation rearing its ugly head in recent years. So they had that luxury back then when COVID hit. They don't now. Okay, we'll talk the stock market, and then we'll hit on a few trade ideas, updates on anything. This is VIX, really one of my favorite trades right now. I think I feel confident has the best RR profile of anything out there. What does that mean? Risk reward ratio. The upside potential, in my opinion, is huge. I would be not in one bit surprised if we saw a market crash within the next few weeks based on what's going on right now with sentiment. I know everything seems so strong and hunky-dory, and from those periods of extreme bullish sentiment and just complete avoidance of certain potential cracks and problems, and especially with the economy rolling over, and now we have that void again, the blackout on data. So let's just say the spigot gets turned back on, and sooner or later it will. Government will be light switches will be flicked back on in the offices of BLS and elsewhere, and these government agencies, and then if all of a sudden they're like, oh shit, we've been shut down for 3 weeks, from the government shutdown, and look what's happened. We finally got this data coming in now, and boy, things are turning a lot faster than they thought. Fed will come in with an emergency 50 basis point cut. But and again, the market may rally. I remember back in 1998, it was at 98 or 2000, they did a 50 basis point emergency cut. That was an intermeeting cut. Market had its best day in history, the Nasdaq did, and then it was down, a few months later, like 50% from there. So anyway, let's just analyze a chart for what it is. I'm going to change the color here on this tool real quick. So this is what I've been pointing out. We've been steadily making higher lows with the indexes flirting with highs, but yet the VIX is really showing some resiliency, even recently. Moving back up. And to me, it just looks like a coiled spring, just waiting for a certain catalyst. And that catalyst, who knows where it'll come from. There's a million and one things. The market's ignoring them all now. Trump's kind of sent off. Somebody showed me something today, something about coming in heavy with on Hamas if they don't turn over all the hostages and the bodies and all that. And so, the market's become completely desensitized to any other issues in the Middle East. Of course, Russia, we got the two world's largest nuclear powers are starting to, if you found the rhetoric between Putin and Trump too. So whatever. Again, the markets do that. There's times where it's kind of the fatigue. In recent years, I think they're fatigued from everything going on in Ukraine, Russia, U.S., China, Israel, Middle East. But all I'm trying to say, guys, is there's potential there. Now, look, it can go the other way. If we are going to have a true good old-fashioned blow-off top, then, then what you're going to see here in the VIX, it's possible. And this is why there's certainly not a zero downside to, triple-digit upside, because I do see triple-digit potential. If the VIX comes back to where it spiked to the last few times here, from where we're at today, it's going to have to go up 264% just to get there. And guess what there is? I've covered this before. There is where, for decades now, where corrections, just bull market corrections ended, including the last two. The big drop in 2024 and the drop earlier this year. They were just corrections, and this is where true bear markets since the financial crisis, and including the financial crisis, have ended at that level. So if you want to play that game, and that's certainly in the realm of possibilities. Now that's 446%. You're not going to get there in a day, but you could get up a good part of it pretty quick if there's a market crash, meaning a swift drop. And again, that's only going to happen if these levels are taken out. So let me go to the levels. But again, we have the VIXY and VIX futures setups that I gave you. We're right on the line right now. R1 means first resistance level. That's the downtrend line. R2 is the second. And then all the targets that I gave you the other day. And then there's my preferred proxy futures. And that is this is a chart I shared with you the other day, I believe. This is a daily chart, 3 years. We've actually started to, if you zoom in close enough, we've taken out the downtrend line. And it's just a series of, the VIX is kind of like almost like an irregular, somewhat regular EKG. You get going, you get these divergent lows. That was a divergent low, and that was, well into the double digits gain right there, that pop off that first divergent low. And just like, the stock market goes on to make another high. So that was a correction in the stock market. Then you set up that bullish falling wedge with even bigger divergence. And so you've had these three big divergent lows, and we milked almost every cent of these two. These are the biggest. You only have to do a couple of these. You could do one of these a year, and if you have enough money in the VIX, and it doesn't take a lot. When you're trading a vehicle that's going to go up triple digits, it doesn't take a lot of money. And that's the other thing too. Don't if you're new to this, and Randy really likes that VIX, I'm going to put all my money in there. That's like going to Vegas and putting it all on red 18 or whatever on the roulette wheel, or betting it all on black or red. Don't do that. That's slop. That's gambling. If you're going to gamble, go to Vegas. Get a free drink out of it. The market's not going to give you free drinks. So you have this nice downtrend line, and then this is the recent lows. So when the VIX, and again, these are VIX futures. I already showed you the VIX, the actual VIX making higher lows. That's the real index. Futures are going to roll, so there's different contracts coming in, rolling at different times, but that's it. So nice setup. These are all your potential price targets. And again, like I said, I've been a big proponent of being always, at any point in time, but more so recently, trading a diversified portfolio. That means both long and short, the most bullish and bearish setups in the individual equities, also commodities, Fixed income, although I told you recently I'm disengaged. I'm kind of, especially with the shutdown in the government. I don't have much of an opinion right now on the near-term direction of treasuries, but I do certainly have a long-term opinion, which I've shared many times, and that is we are in a new secular bull market in interest rates, which really meshes with, and that's based on technicals and fundamentals as well, and it meshes with my longer-term outlook for the stock market. But there it is, guys. That's it. So take it or leave it. Weekend's coming up. And again, the risk reward is measured kind of upside potential downside. So let's say the market gaps up on Monday. We're already pushing. We're at really good support on the VIX, the spot VIX, and so to me the downside, and it could drop pretty good, but again, when you get down towards that level, you kind of get price compression, for lack of a better word, on the VIX. The down days aren't as much as this is when the bottom can fall out of it. If you're long the VIX and you stay too long to the party, those drops when the VIX is at high levels can be severe and they can be relentless coming down. But when you get down towards the bottom, you get that price compression. So that's what I'm talking about. The downside risk, in my opinion, is much lower than the upside potential. Because when the VIX wakes up, think of it like a sleeping giant. When it wakes up, that giant can roar, and it can roar fast. So we'll see. And again, it's just one of many things. Nothing to, wait till you get the, additional breakouts that I showed you if you want to be safe on VIXY, and the VIX itself, spot VIX needs to take out about 1720. That's on my daily chart. That's pretty good resistance. All right, let's move on. Let's talk about the Qs, which this is QQQ. It's a daily chart, busy board, kind of some longer term trend targets I gave you, and this is my kind of lights out level, about 466 on QQQ if and when we get there. First things first, on the daily time frame, you have to take out that long-term uptrend line off the April lows. On the 60-minute chart, gave you recently, we have an active short on it. We broke down there. That was a sell signal. We bounced off support there. And we recently, I said, take a shot there. It was objective at the downtrend. Oh, no, this one right here, on the downtrend line off the highs. However, I could easily see the possibility, and hence I drew it out with the dashed arrows, of a new marginal, new and still divergent high right there. And that's what we have so far. You look at my 5-minute chart, this is what it looks like. 5-minute kind of just zooms in on your timing, if you will, if you want to kind of give them little micro trades. Look for the same thing. Look for these divergent highs. You can see the negative divergences. And then you usually get a trend line break that'll give you a sell signal. So this is our most recent divergent high right here. This is my primary trend line. It was already broken and back tested. And now we just took out, as I started the video, actually, we were kind of flattish. And right as I started queuing up the video, I could see us starting to break down that secondary trend line. So this was a back test of the primary trend line I have there. And I have a parallel, what I call a BOD, benefit of the doubt trend line, because I had a brief spike down there. I think that might have been, what was that? That wasn't Fed Day, was it? No, that was over here. But we had this other, post-breakdown reaction low, and now that's taken out. So probably the biggest thing to look at in the Nasdaq is Tesla. Not just because it's been down last couple days. I mean, that's part of it, but we put in, I noticed the other day, a bearish engulfing candle right there. Bearish engulfing candle is when the body, which is the fat part of a candle, engulfs the body of the previous candle or candles. In this case, we engulfed 1, 2, 3 prior candles. And we also have a potential, this is what we call a ascending broadening wedge pattern, which is now cracked. But most important, well, not most importantly, but one thing I noticed too, on Tesla, this PPO does a really good job of defining trends and giving you buy and sell signals. If you look closely, and so what you want to look for are what I call high level are up here, high level bearish PPO crossovers. And we've only had, actually there's one right here. I need to, I'll borrow this. Let me borrow you there a little. There's one right there. And we just had one right now. This is starting to cross, And you can see without really any exceptions, again, high level means you're up here comfortably above the zero line. So we had one there. That was followed by a drop of, let me just try to rough estimate it for you. It's about 25%. We had one right here, high level bearish PPO crossover. From there, well, we had sell signals too on trend line, so I was just trying to measure for you. 53% and one right there, and this one I have to move away or I grab all the lines. Just going to grab right here and go down to that low, 33%. So they're all well into the double digits. Let's just call it, at least roughly 30% or better average. And in this case, I don't see really any support on Tesla to this uptrend line right here, and that would be a drop of about, if it's hit next week, that's going to be a drop of about 21%. Keep in mind that bearish engulfing candles are also topping sticks. They tend to mark the top of end of a bull run and the start of a new downtrend. So again, that's just kind of a near-term pullback target on Tesla there. And Tesla will certainly influence what the Nasdaq 100 does. What else do I have for you? Netflix, give you some targets a few weeks back, couple months back. Netflix already broke that yellow uptrend line right there. And I had some targets I had given you on the 60-minute chart a while ago. I noticed that it took out that T1 level. We had a breakdown right there of the price channel, and following that divergent high. Danced on T1 for a while, even put in a divergent low right on a little slight punch below it. And we've been walking around. We've been in this sideways trading range for the last 2 months since then. But we just recently broke it down and we're below it. So that increases the odds that Netflix is going to go down and hit T2 now. And most likely, again, based on the long-term chart, this is my long-term, my weekly chart. Here's your primary secular bull market uptrend line. It comes off the early 2022 lows. A monster of a trend line, very well defined. So well defined, a blind man can see this trend line. And when that trend line goes, you can see below it. There's my line, but I'll turn that off. And you see those, yep, there are my beloved 200-day moving averages. When I go to a weekly time frame, they're going to show up as the 40 weeks. Because there are 5 days in a week, 5 times 40 equals 200. So it's pretty much the same moving average. And like many, especially tech-oriented stocks, when you're above them, you're in a bull market. And you want to buy pullbacks to them. When the 200s go, you're in a bear. The trend has changed. That's a sell signal. And you want to short. Be short. You want to be out of those longs. Once you regain the 200s, bull market, buy pullbacks to them, buy. So bottom line is, guys, right now it's in a bull trend on this weekly time frame. Sell signals on the shorter term time frame, those shorter term targets. But if hit, so let's say we go on down, we start hitting some of these deeper targets, then Netflix, let's go back to the weekly. Netflix has a potential then, or will, if we go down far enough, take out dual support, the 200 simple, the 200 exponential, as well as the primary bull market uptrend line. And then that, when you get trend changes in this stock, it's just the nature of this beast. This thing tends to fall pretty good. That was a 78% drop there. There was a 41% drop. There was a 41% drop. That was not even a bear market in the stock market, but it was an 81% drop in Netflix. So this is just the nature of this beast. It's a trendy little sucker, and the trends are powerful. So one to watch. And we still have plenty of longs out there as well, with the market still above its 200-day moving averages. And at best, we're looking at some short-term sell signals next week, maybe, or what I just showed you on the short-term 5-minute charts. But we still have stocks like Novo and VO. We bought that one at the lows. Went up to T4. I expressed my strong concerns or preference, personal preference to take some profits. Said the odds for a pullback were really good. Told you, look to buy it maybe around a pullback to T2 or so. And it's zigzagging up. And so far we're in an uptrend. And there's T5 still the final target. There's a potential for more if the market holds up, but just wanted to update that, there's still plenty of these guys, and, whether you're against them or not, the gun stocks still looking really good. Ruger just continues to rally right up, headed up to my third target. We have a steep uptrend line I wanted to point out to you. So if you get to T3, if you're holding out for more, that's it. I can see the potential. In fact, I can see a really good likelihood. Yeah, I'm gonna even add it right now. I do these in videos a lot of times. I'll add targets. T4 is at that 49.60 level. I think I've had it on the chart since I gave this to you, but that's a really good, really nice resistance level, and it's almost a magnet if the stock can get there. It wouldn't surprise me to see a correction before it gets up there, but we'll make that the final target. But we're coming up on T3, and we're also getting really overbought right here. So the odds for a correction in this one are elevated. And then the sister trade, along with Ruger, Smith & Wesson. And that one, like I said, we entered it right here. Put a nice big divergent low, went up, took out right here, took out our 200-day moving averages and the downtrend line. But similar to Ruger, you have an uptrend line, which if taken out, may trigger a correction. A correction to where? Well, you pull back test the trend line. That would be an objective entry. What I give you, $11 is the current final target, which is the downtrend line plus price resistance, the primary larger downtrend line that comes off the 2021 high. You can see there. All right, I'm not going to go over each and every trade. Somebody did ask, actually two people asked. Yesterday, somebody asked me for an updated some charts on the natural gas futures for both the November and the December contract. And then there was a follow-up under that same thread. Somebody asked for a futures contract. I replied to that. It's in there. So here, I'm talking about this. Let me go to the home. This one right here. Yeah, it was yesterday. So somebody asked. And I just want to address this in case you're watching the video and you didn't get a reply. Futures for NG would be great. And so I said, yeah, they're right above there. So you missed them. There's both the December and the Novembers. And on that. So yeah, we hit both the on both the futures. We happened to have perfect alignment of price targets, T1 on UNG, and then the comparable levels on natural gas futures. And so the odds for reaction, this is why I list multiple targets. Upon the initial tag of each target, the odds of reaction are elevated and likely. And so that's what that is. And then in there, I said, yes, sir, you could either pull on the futures. I said either the downtrend line or I give you a price support level, which I think we're coming up on the futures right now. But I also can tell you right here, I can see, if I take this reaction low, come across, we've got a reaction high, several gaps that I'm hitting right now. And so this is an objective spot, I believe, to re-enter if you took profits on T1, and sidestepped or turned around and shorted it to gain that 6% pullback that we've had there. And so these are still, again, if you turn off all the lines and you want to just look at it from a pure price perspective, we're zigzagging higher right now. So if we can keep above these recent lows, you have all the makings of an uptrend. And then what tends to happen, at some point, you'll start to get an acceleration. And crude's finally pulling back, rightfully so. Again, the economy is slowing down, so you probably see demand destruction unless things get heated up in the Middle East. But the lower crude prices go, the more supportive that is typically of natural gas, because they start capping some of the marginally productive wells, and so you have less natural gas coming out of the ground along with crude. So we'll see. Keep an eye on that. I don't have, if you're wondering, I haven't done a lot of updates on crude. Crude's in la land. It's just kind of moving around like again like an irregular EKG, for lack of a better term. It's just sideways. I can't make heads or tails of this chart. The one I can make heads and tails of is gold. I'll just give you an update. We haven't broken down yet. We're still above the primary uptrend line I gave you in gold, as well as GC gold futures yesterday. Silver futures did break down, but again, as I was very clear in there, for both silver and GDX, they're only going to go so far unless gold breaks down. So just take, if you take those sell signals, take it with a big grain of salt, or don't take a full position until gold breaks down. This is a chart I gave you yesterday. It was a 8-hour candlestick, so almost daily. There's these are just similar to daily chart. There's your uptrend line in gold, big divergences, and just waiting for a sell signal. And sure, yeah, I can give you a little minor. I'll give it to you now if you're gonna actively trade it or swing trade it. You'll get a little reaction most likely right here. Buyers will step in at 37.38, but ultimately at minimum, I think once that trend line breaks, gold's going to come back into either or both of these trend lines. This is the first really nice support level. I would be really surprised if they didn't buy it there. If we go lower, there's your next support level. So we're talking a drop that I'm looking at about anywhere from about 9 to 15% in gold. And then silver broke that trend line I gave you yesterday. That was a shorter term time frame. What we're on our hourly chart, 60. But again, gold didn't break down, and that's why silver. I mean, it hit the first target and it bounced, and it's back testing now, and it's still very, very much. Now I got to just fix that divergence line. All right, they scored a first down, so you move the first down markers, get another 10 yards. That's basically meaning the divergence is still very much intact. And now Monday, it probably isn't going to happen today, but if Monday or anytime next week gold does break the trend line, now you have silver back testing. I'm going to put a minor little uptrend line right here, and then you'll most likely get more bang for your buck. Even from that breakdown yesterday, if you took it, let's just say you jumped the gun on it, and you got a quick 3.5% to that first target, and then it bounced there. So and then again, silver has more. This is just a 60-minute chart. So remember, we're zoomed in a lot smaller. If it goes down to its comparable trend line, I'm going to measure it for you. That's all the way down here about the uptrend line in the 39, 37-ish area, which would be about an 18% drop in silver. A lot of hot air in silver right now. Strong uptrend, strong momentum. They're buying the dips. But again, it's simple. Gold's in an uptrend with a very well-defined trend line. Got to have that trend line break, and then boom, GDX, and silver will probably drop twice what gold will drop, somewhere in there. Let's just wrap up by looking at the Mag 7, 8, 9, 10, whatever you want to call them. Daily chart. There's NVIDIA. Just a huge divergence on the daily time frame, negative divergence. Just like you had big divergence back here, and that was followed by a, it's hard, I can measure it right here. That was followed by a drop of 42%, and the morning that we covered all shorts went long was the April lows right there, April 6th or 7th, whatever that was. And again, we've come full circle. Big divergent high. Probably the best uptrend line I have right now is that one right there. And Microsoft already peaked on earnings back here and remains, this is resistance here about 5. Let's make that a round number. It says 517.99. There it is, 518. Everybody loves round numbers. So 518, little minor downtrend line right there on the daily. And when you go to the 60, you can do that, and you can see my single uptrend line right there, a little divergent high. Oh yeah, and on the 60, NVIDIA, divergent high, a little breakdown of a minor trend line. We're on a 60, so I'll jump forward to the next one. Apple, a little wedge right here, needs to break this trend line. It's not written as such, but you can see the lines up and below. There's your prices making higher highs, your indicators making lower highs. So there's a 60-minute wedge on Apple, and this is what it looks like on the daily. There's your divergence. That one's really much like, there's that 60-minute divergence, really looks like that. And this yellow line right I have down here on the RSI, that's about as high as it gets on Apple. Every charting platform will give you a 70 as the overbought level. I take that and I throw it out in the garbage on certain stocks because it doesn't mean anything. A lot of stocks or securities get there. So you want to see runs up to or near this 77 level, and that's usually where the party ends for Apple, at least before at least a correction coming when you get there. So, and quite often a more lasting top. Alphabet, GOG. It's my daily chart. It's kind of sloppy, a little divergent high there on the 60. It's walking lower. A lot of thin air. If it starts to fall, there's a gap right here. And so that's a natural target. It's a magnet for a price target for short sellers or longs looking to get in. About another, it has to drop another 9% from where we're at now to get there, which would be a total drop of about 12% from the highs. If the gap is entered and backfilled, you're going to go down towards it, and you can see my uptrend line. This is a likely target right there. And so it'll come in, this is what it'll look like, something like that. Okay. And all that is all said and done from the recent highs. That's going to be, if hit, technically the gap's right here at about 212. That'd be about a 17% drop. Amazon, it's been moving sideways last few months. Put in a divergent high, had a sell signal there, broke down, put in marginal news, still divergent high, broke down recently, and needs to take out this level right there. And you can see these are potential targets. That's what it looks like on the daily, coming off big divergent high, just like a divergent high there that was followed by a drop of 33%. Just like here, it looked like the stock, Amazon and the stock market would never stop going up, just like now. But all of a sudden, one day it just did. Why? Because everybody's on one side of the trade. Everybody's bullish. When the last bull buys his or her share of stock, nobody's left to buy, and that's when stocks stop going up. So it's kind of like a game of musical chairs. Music's playing, it's great, and then one day the music just stops. If you grab a chair, meaning if you have a stop loss in place, you locked in some nice gains. If you don't, you gave back in a matter of just a few months. You gave back what took probably twice that long to build up in gains. Meta broke down below this long-term trend line. So it's a common theme I'm seeing, guys. If you haven't noticed, by the way, as I'm going through these market leaders, the Mag 7, most of them peaked. And I've been saying this for years, over time, many years, that a bull market ends when the leaders die, until you can put a knife through the leaders, and then and once they die, now you can look at a glass half full if you're an optimist and say, oh, that's a healthy sector rotation or stock rotation, a little profit take on the leaders, and we are seeing some participation in the lower price stuff. Well, what have I been focused on for the last couple of months? You got it, Pepsi and for Novo Nordisk, all these established blue chip companies with just better RR profiles. They've been doing great. We've been buying in the Rugers and Smith and Wessons and everything else I've covered recently. Those are the ones that have been coming up, but most of them are bear market rallies. And I don't care semantic what the labeling is. We're making money on them, but these guys have stalled out and have been correcting and have also triggered some sell signals. It's not just that they're pulling back. It was a sell signal there. There's a big old gap right there. And as I've talked about, a lot of these have triggered. When I put up my histogram here, we've started to cross over on not NVIDIA. Yeah, NVIDIA already did. NVIDIA just triggered a PPO bearish crossover after a big green hill. And again, I've covered how that is typically you get a correction either in time and or price coming after those bearish PPO crossovers. Microsoft already did. Microsoft has been correcting. It's been correcting sideways more so than in price. I mean, there was certainly a drop in price. These are my long-term targets where I think the stock's going. These purple arrows. And that one's, on a sell goal, or at least the PPO's in negative territory. Apple, not even close. Neither is Alphabet. But the rest are. Amazon just recently crossed over. Bearish PPO crossover. The last time it did was right here, and that was followed by a drop of 29%. There was a big green hill. Remember, I like the bigger the hill, the better it is as a sell signal. There was one right there, and that was a quick 19% drop. There was a big green hill there. That was about a 31% drop. Meta just recently crossed over, and so yeah, this market just needs a kick in the ass to get the rest of the stocks going and then start to build some downside momentum. There's Meta on week 2 of a bearish PPO crossover and a trend line break. Go back to the daily chart. That's what it looks like. Broadcom. Let's see. I know Broadcom's been strong. No bearish PPO crossover yet, but the last time it made one was right here, and it fell about 40% from that point. All right, so these are the things I'm watching for going forward. There's Tesla. No bearish PPO crossover yet. By the time we get one, if this, ascending broadening wedge, if this bearish engulfing proves to be a topping stick, then, as I already gave you, just a minimum target there. But you got to go out to the weekly chart. Let me park that, get that out of the way, so we have a little more real estate. It's a lot of trend lines here, but I would tell you the one that's probably most important is right here. Comes off the 2019 lows. Take up this trend line right there. It's nice and well defined with these reactions. It's also a potential pullback target. If you're looking to go long Tesla, if you think this one has a lot more upside, or if you're a bear, you want to see that taken out, and then Tesla will continue down. If the stock market buckles, I can all but guarantee you this is going to be the route of Tesla. And so that is where I expect it to be. But again, trade off the daily 60-minute charts. You can trend trade or invest off the weeklies. What that does is if you take these sell signals on the weeklies, such as what would be a sell signal on the weekly? Well, a weekly bearish engulfing candle, that's in the works right now. Today's not over, but right now, the body of this candle does engulf the 2 previous candles, and that would be a topping stick. And then you would, it's an easy trading strategy when you get those. You just put a stop above the top. You can put above the top of the entire candle, including that skinny part, that little wick right there on top. Or you could just put it a little bit above the body of these 2 candles and then let it run. Okay, I'll wrap it up pretty much about where I started. There's that VIXY. Again, for those of you that don't use futures, if you prefer ETFs, there's a lot of them out there. And I always say this, but it bears repeating. In my opinion, in my humble opinion, you do not need to use the leverage VIX ETFs, especially if you get in too early. That decay, the leverage is going to work against you. Yes, it certainly works. If you get an explosive move up in the VIX, you can actually outperform. But the point is, it's like, the VIX is like shorting the market on steroids, because, if you get a correction right and the S&P drops 10%, the VIX can go up 40, 50 or more. You don't need leverage on something like that. It's just like natural gas. That's why I give you UNG as an alternative. I think there's some natural gas leverage ETNs out there. You don't need it. It moves so much on its own. In a good day, natural gas can go up. I've seen it many, many times. I've been long natural gas. It's up 15% in a day. I've seen it go up 20% in a day. And then I've seen it do it again the next day. So, it's not right now. It's a little more tame. It's not that volatile. But when it gets in those rips, it can do that. And the VIX is the same way. So I just wanted to kind of say that. And I'll wrap it up here. And I'll probably pick it up next week. I might cut out early today. If anything crazy happens, or if I'm in front of my desk, if you post any questions, comments, try to do it under this post. And I'll get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great weekend.